what if I told you that right now is the best time in 2 years to lease industrial space in El Paso? While others see empty buildings, we see opportunity. While others worry about rising vacancy rates, we see negotiating power for smart business owners like you. I'm Angel Cazares with KW Commercial, and we've analyzed the latest CoStar data to show you exactly how to leverage current market conditions for your business advantage. Let's dive into what's really happening in our industrial market. The El Paso industrial market encompasses approximately 86 million square feet of commercial and industrial space. This includes distribution centers, manufacturing facilities, and flexible industrial buildings serving diverse sectors from cross-border logistics to regional manufacturing. Currently, the market is undergoing a significant adjustment period. Several fundamental shifts are creating both challenges and opportunities for market participants depending on their position and objective. The most notable change in our market is the increase in vacancy rates. As of September 2025, the vacancy rate stands at 12.2% compared to 9.1% during the same period last year. This represents a 3.1 percentage increase over a 12-month period. This shift is primarily attributed to new construction activity over the past year. Developers delivered 4.6 million square feet of new industrial space, representing a 44% increase from the 3.2 million square feet delivered in the previous year. For market participants, this means increased options and negotiating leverage for those seeking space. Despite the increase in vacancy, tenant demand remains active in El Paso. Net absorption, which measures the amount of space leased and occupied by tenants, reached 1.5 million square feet over the past 12 months. This represents more than double the 610,000 square feet absorbed during the previous year. This indicates that businesses continue to expand and relocate to El Paso. The challenge lies in the fact that the new supply has outpaced the growth, creating the current market imbalance. Think of it this way: while businesses are still growing and leasing space, the market has expanded its capacity faster than the tenant demand can fill it. The rental market has experienced a notable deceleration in growth rates. Year-over-year rent growth has slowed to 1.2% compared to 3.2% during the previous years. The current average asking rent is $8 per square foot, representing a modest increase of 10 cents per square foot from the previous years. For tenants, this environment provides increased negotiating power with higher vacancies and moderate rent growth. Landlords are more receptive to tenant improvement allowance, flexible lease terms, and competitive rental rates. If you've been considering expansion or relocating, the current market conditions may present favorable timing for your real estate decisions. Understanding market segments is crucial for strategic decision making. Our industrial market can be categorized into three primary segments. Distribution and logistics represents the largest portion at approximately 70 million square feet. This segment currently shows a 14.2% vacancy rate with average rents of $7.36 per square foot. This is where we're seeing the most significant impact from new construction. Specialized industrial facilities show tighter market conditions with only 3.1% vacancy and higher rents at $9.10 per square foot. These include manufacturing plants and specialized facilities with unique requirements. Flex space represents mid-tier facilities with 5.4 vacancy and higher rents at $13.45 per square foot. These smaller versatile buildings serve multiple functions, including light manufacturing and office industrial combinations. There is positive news regarding future supply. The construction pipeline is showing signs of moderation. Currently, 3.2 million square feet of industrial space is under construction, representing a 29% increase from the 4.5 million square feet under development a year ago. This reduction in new supply is a positive indicator from market rebalancing. If demand continues at current level while new supply moderates, we should see vacancy rates stabilize and potentially decline over the next 12 to 18 months. Several significant transactions have shaped our market this year. The largest lease was executed by WeWin Corporation, which leased about 870,000 square feet across two buildings in the Eastside submarket. This represents a substantial technology company commitment to the El Paso market. Additional notable activity includes Unis Logistics, Automotive Lighting, and Marks, of all which demonstrate continued confidence in El Paso strategic positioning for cross-border commerce and manufacturing operations. For investors, the current market presents selective opportunities. The increase in vacancy rates has created potential value-add opportunities, particularly in newer properties that have not yet achieved stabilized occupancy. Successful investment strategies should focus on location, quality, and property type. Specialized industrial and flex spaces continue to show stronger performance, while distribution properties may offer value opportunities for investors with appropriate risk tolerance. El Paso's strategic location for Mexico trade remains a fundamental market driver that should support long-term property performance as the market rebalances. A sub-market analysis revealed distinct characteristics across metro areas. The East submarket continues to see the most activity in terms of new construction and major lease transactions. This area benefits from a proximity to transportation infrastructure, including the airport and major highways. The West submarket tends to feature smaller, more specialized facilities, while the Northeast Butterfield Trail area shows emerging niche activity. Each submarket requires specific evaluation based on your business requirements. Based on current market conditions, here are strategic recommendations for different stakeholders. For tenants, this is a favorable leasing environment. Take advantage of increased opportunities and landlord flexibility. Conduct thorough market analysis before committing to those lease terms. For property owners, focus on tenant retention and competitive positioning. Consider offering concessions to attract quality tenants in this competitive environment. For investors, focus on well-located properties with strong fundamentals and long-term growth potential. This concludes our analysis of the El Paso industrial market for 2025. The market is currently rebalancing, which creates strategic opportunities for informed participants. As your KW commercial advisor, I provide comprehensive market intelligence and transaction services for businesses and investors in the El Paso industrial sector. Whether you're seeking to lease, purchase, or sell industrial property, I offer the expertise and the market connections to achieve your objectives effectively. Please connect with me through the contact information provided. I welcome all your questions. I look forward to discussing how these market insights apply to your specific situation. This is Angel Cazares with KW Commercial. Thank you for your time and your attention. Talk to you soon.